Hey guys, Chuck Barone here. Monday, July the 18th, 2022. Another busy day in the world of finance today on a Monday, guys. Starting off with a big bang today. Before we get to the show, I just want to say, as always, thank you so much for your support for the show, for watching the videos, for all your questions and comments, and it's just everything you guys have done to support the channel and the videos we've been putting out. It's just been way over the top, and I can't tell you guys how much we appreciate it. In the markets today, a wild day, guys. Stock market ended up tanking pretty hard at the end of the day. Basically a 500-point swing. It was up huge at the beginning of the day and finished down pretty dramatically. This is what they call on Wall Street a bear market rally, or a sucker's rally, where you see these wild price gyrations all over the place. Everybody thought it was going to be a continue of the rally on Friday. Oh, but what happens is the smart money, the real traders and the guys who do this every day for a living, they're selling into these rallies, guys. They know where the money needs to go. So be careful buying stocks in this market right now. The bond market, 10-year bond sitting at 2.96. We still have that inverted yield curve. It's looking kind of really twisty now, though. The 2-year, though, still higher than the 10-year. This is, again, an indication that recession is on the way or here. They're talking about, we've heard all different kind of reasons why, rates are kind of staying low in the face of rate increases by the Fed. Today's was the best so far. What they're saying is people are anticipating the Fed raising rates now, short-term rates, so they can cut rates later to revive the economy or to save the economy. The St. Jerome and his minions plan, where these people think they can just manipulate everything. They think everybody's stupid. I don't mind being lied to. I expect these guys to never tell the truth. It's when they insult your intelligence and think you're an idiot, that's what kind of gets my goat, guys. So this bond market's all kind of upside down. We all know what's happening. We're getting central bank support in there to keep these longer-term rates down, to try to salvage what's left of the long-term debt borrowers, real estate and stuff like that. Rates are going to go up, guys. Believe that. The dollar, finally a weak day today, coming down to 107, about 107.5 on the dollar index. A little bit weaker today. I think that, with these meetings coming up, which I'll talk about in a minute here, I think they're anticipating some of these other central banks raising rates. So the dollar gives up just a little bit of ground today, not much. Still a pretty strong number on the index. And the metals are still soft, sadly. I thought with the dollar coming down even fractionally, we might see a little bit of a rally in metals today. They ended up down fractionally, kind of holding their own here. I think that the metals market, gold and silver at least, are waiting on this dollar to kind of come down back to earth a little bit, and that's when we're going to see a nice rally in metals. The oil market today was up big. Nice gains today for oil, $102 per barrel on West Texas. Natural gas had a big day today, up 6.5%. I think a lot of that is not only just demand for natural gas, I think they're anticipating future demand being much higher. I think with this geopolitical thing with the Russians and Germany and Europe so dependent on natural gas from Russia, I really believe that Russia's going to turn the plug on them, and they're going to expect natural gas prices to go up, because the demand for it's just going to go through the roof. Bitcoin up over 21,000 today, was actually up above 22 and change earlier in the day before coming back down. It's still kind of in this trough between 18,500 and 22,000. We're looking for a breakout to kind of give us some direction. It looks like Bitcoin is a little bit stronger, not strong enough yet to break out from this 22,000 resistance number. In news you guys need to know today, guys, these central banks, these central bankers, what they're doing now is basically insisting that we all put up with more inflation. They pay lip service to fighting inflation with these the short-term rate bumps. Especially the Fed has been doing that, and nobody else really. At least When I talk about nobody else, I mean the European Central Bank or Bank of Japan. Canada, Australia, New Zealand, and a lot of countries have been bumping rates. But these guys are kind of the ones dragging everything along. And today's an interesting day because today's day one of this new tool the European Central Bank is talking about, where they're going to do unlimited bond buying to support the debt markets in the Eurozone, to prevent fragmentation. I think they're worried that the weaker economies in the Eurozone, the Italians and the Greece, etc., they're trying to keep that debt market stable at the expense of other more advanced economies, Germany, etc. We'll see how all of that works out over time. Interestingly enough, the ECB and the Bank of Japan will be having what's in essence their open market committee meetings this week. The European Central Bank is expected to raise rates. Wow, go European Central Bank. And Japan is expected to stand pat at their rate. I think they're about 2% on their overnight rate. The European Central Bank, however, they're making a bold move here, guys. They're going to raise by 1/4 of a point this week, and they're bringing their rate then all the way up to negative 0.25%. So they're still going to be at a negative rate. At the same time, they're offering this unlimited bond buying. It sounds to me like they're just insisting that this inflation thing's going to go away. It's got, by magic, more money and more stimulus is going to help with this problem. It's just not going to end well. And sooner or later, these central banks are going to do what they have to do because the public outcry is just going to be so stupendous that there's really not much that they can do other than respond to it. So wait for that to happen. It's coming, guys. Big reporting week this week. A lot of stuff on real estate. We have the building permits coming tomorrow along with housing starts. On Wednesday, we have the existing home sales and the mortgage bankers index. Also the EIA report on oil stockpiles. On Thursday, we'll have jobless claims. We'll have our leading indicators and the report for natural gas. A big week for earnings, as we saw today. Banks, our friends in the banking business, coming out with their earnings. Not great news for banks, guys. JP Morgan, Wells Fargo, Bank of America, Citibank, Morgan Stanley, all suffering double-digit declines in profits. Now, they're still making money. They're just, these guys are. If they're not making more money every quarter, it's a disaster. And these numbers were down pretty stupendously from between 25 and 50% decline in profits. Goldman hung in there because of their trading desk, their trading results. Their core businesses aren't doing jack, but they're holding the earnings are staying up because they're making money on trading, selling into rallies like today's, right? Bank of America today came out with the comedy line of the day. Bank of America says that the consumer is in great shape. Oh, Bank of America, don't you know your customers well? So, in the face of record levels of debt, negative savings rates, and prices going up everywhere on everything, this is what they call putting the consumer in great shape. Well, does that sound like great shape to you guys? It doesn't to me, man. I mean, they're living in this make-believe world they reside in that has nothing to do with what we're dealing with, you and I, the regular working class people out there, trying to, get ahead in life and live a good life, and they don't seem to quite get what all of us are dealing with. So here's one thing I can tell you. When you hear these reports coming out later this week, when they say that the economy is shrinking 1.6 for the quarter, when it's bad news, doubling it is probably a good idea. So if they say 1.6, that probably means closer to 3.2%. When they come out with good news, the economy was up 1.6%, you can cut that number in half, and the true number is probably 0.8%, right? These numbers that they give us are designed to lead us the way they want to go. If they were measuring inflation, for example, by the measures they used back in the 80s, the actual inflation rate would be closer to 20%. So take some of these reports with a grain of salt, guys, but the evidence is in on this recession. It's here. It's going to happen. It's happening already, as I've been telling you guys since our very first video. We're already in a recession. The Atlanta Federal Reserve Bank has the GDP tracker. It's saying that the GDP for the second quarter, the gross domestic product of the United States, will be down 1.5%. What that really means is, by what I just said, is actually GDP is probably down closer to 3% for the quarter, right? So we are in a recession now, and all of the things that come with it. Leading the way on this recession is going to be real estate. Real estate market right now, guys, it's just I've never seen it change so fast. It went literally in a matter of weeks from an incredibly powerful seller's market to a buyer's market, if there are any buyers left. Now it's going from housing going up, $100,000 a year, now coming back down to earth. The amount of houses listed here in Las Vegas tripled since May. They're taking way longer to sell. They're not getting anybody coming to look at their houses. More than 25% of the houses listed have already reduced their prices. And now they're not only reducing once, they're reducing again, just to try to drum up some interest and get some people to come and walk through the place. Real estate is cratering hard, guys. It's going to crash. It's going to get ugly. I'm thinking that the median price, and I don't know where you guys are or what your median prices are, but to get realistic, the median price needs to be between $300,000 and $350,000 for payments to work at the rates we have now. So if your median price is $400,000 where you live, figure it's probably going to come down between $50,000 and $100,000. If your median, like in Las Vegas, is $460,000, it's going to come down more than $100,000. This is math, guys. People have to be able to not only afford the payment, but qualify for the payment. And until these prices come down, they can't. Let me tell you a little story. One of my kids has a friend who sells houses for a builder here in town. And his friend was telling him that in May, they had 40 closings. Boom. Market's going great. In June, they were down to 12 closings. So far for this month in July, he told my kid they're -7 for the month. -7. So they actually have people canceling contracts now, not following through with the purchases. All of this is going to have a cascading effect on the economy, and, well, we know where we're going. Before I wrap it up real quick, guys, I just want to talk about President Biden Carter's trip overseas with his butt-smooching stop in Saudi Arabia. He gives the Crown Prince a fist bump, and the Crown Prince gives him a fist bump right in his butt on the way out of the country. Biden was there to plead with the Saudis to turn the spigots on in the oil and produce more oil. Today the Saudis came out and said, well, we would really love to help you, but it's not for us to decide, it's for OPEC Plus to decide. Guess what, guys? There's not going to be any more production coming out of OPEC. There's not going to be much relief in the oil patch until Biden Carter lets us start drilling our own oil again. We're going to have prices on oil probably going up. Tomorrow we're going to talk a little more about central banks. I want to talk a little bit about you guys about fiscal policy, which is determined by the Congress critters and the president, and monetary policy, which is the Federal Reserve's part of it. These two, to get this inflation under control, guys, we have to get these two things in sync, right? If the Fed is raising rates and trying to tighten monetary policy, but at the same time, Congress decides that $785 billion for defense is enough, let's add $60 billion to that, that's not good fiscal policy, right? So until fiscal, government, monetary, Federal Reserve are in sync and working together to lower prices, unless they're going to get their spending under control, they're going to keep rates high to tighten up credit in the credit markets. Until these are in sync, we're not going to have any relief, guys. How long do you think that's going to take? Really? So anyway, we've been telling you guys about this recession. We've been telling you it's going to be pretty ugly. So far, we've been pretty much right on what we've been saying is going to happen. We've been predicting it before the reports come out. We're going to be on top of it again. You know, they're still saying we might not have a recession. we all know that's horse crap, right? Anyway, tomorrow we got a big day, lots of stuff to talk about. Tomorrow will be a lot of stuff about real estate with those reports. Again, we're going to talk about fiscal versus monetary, the government and the Federal Reserve, how they need to work in tandem. We'll see if they can ever get anything done. In the meantime, guys, sorry the report wasn't so cheerful and happy today, but I tell you the truth as I see it. I appreciate you guys being here and supporting the channel. As always, like us, share us, ask your questions and comment, and if you haven't already, subscribe to the channel. We appreciate your guys' support. Have a great day, and we'll see you tomorrow. Thanks.